Hi there traders, this is Sasha Gogolin at Second Skies Trading. I hope you had a fantastic week and you found many good trading opportunities. And since we are at the end of this week, that means we are back for you here with another top trade review video where we once a week review a top trade taken by one of our students that they have shared inside the members community. And this week we have a new contender, Enkanimal. I hope I pronounced the name correctly here, and that trade in my opinion is a picture perfect example that trading does not have to be overly complex. You do not have to scour your charts with hundreds of indicators, but instead you can trade pure price action, and it's actually a really straightforward trade here. So really good example of that in my opinion. And in this video we are going to look at the price action context leading up to the trade here. We are going to look at the entry and trading strategy that they used to enter this trade. We're also going to have a look at the exact entry, stop loss, and take profit details. And towards the middle end, we are going to check out potential improvement suggestions that we have and that we think could have been made to this trade here. So the pair that traded here was the pound versus the Singapore dollar. And on the screen here, you can see the two charts with the entry, the stop loss, and the target marked. So they went long at 1.78940 and had the stop loss at 1.78440. And the target was at 1.8054, so 160 pips return on this trade, or 3.2R, and 3.2R translates into 3.2 times the risk on this trade. So for every $1,000 risked on this trade here, that would have returned $3,200. So a really nice return, and the total holding time here was roughly 40 hours because they posted this chart here before the target was hit, and the target was hit shortly thereafter. And now that we have looked at all the trade details here, let's head over to TradingView, our favorite charting platform, and break down this trade and have a look at the price action context. But before we do, please make sure to hit the like button if you like what we are doing here to help us grow and to help us to produce more content like this every week. Also subscribe to our channel if you would like to get notified every time we release new content. So with that being said, let's head over to TradingView. And here we are on TradingView, which in my opinion is one of the best charting platforms out there that both Chris and I use on a daily basis. And if you are yet not familiar with TradingView or have been using it, we do have a 30-minute tutorial on how to use it, and you can access this by clicking on the link in the top right, or in the description below we do have a link there as well. Now on the screen here in front of you, you can see that I have 4 time frames. I have the weekly chart, the daily chart, the 4-hour chart, and the 1-hour chart. And you can also see here that I have marked Enkanimal's trade here on the chart. You can see the entry, the stop loss, and the take profit here, matching the trade details we were looking at earlier. And starting out with the price action context, let's start with the weekly chart and have a look at the long-term price action. And you can see here that price has been in this 2000 pip long-term range back since 2016 here, after kind of the Brexit announcement here that happened in June, and price sold off. So after that, price started ranging, and we're kind of still inside this 2000 pip range, and you can see that we have strong reactions here to both sides of this range. Looking on the daily chart, you can see here that we had a strong sell-off here in March that then was met by an equally strong buying here, and after the strong buying, price was more or less pulling back correctively here, so the selling was a lot weaker compared to the buying, and this corrective structure then here on the daily chart was followed by another strong bullish impulsive move here starting on the 30th of June. And it is this trend, this bullish trend here since the 30th of June that Enkanimal here was attacking, and where they found here this trading setup in this bullish trend. And having a closer look at this trend on the 4-hour chart, we can also kind of see this clear impulsive and corrective price action going on. So the impulsive move here starting on the 30th of June, and then we have smaller impulsive corrective structures, and we have a larger impulsive and corrective structure here. And the last strong impulsive move here started on the 20th of July, which then again was followed by this corrective structure here. So this is a very straightforward trade, showing you that you do not need a ton of indicators or all kinds of things. This is just pure price price action trading, and this is trading one of our core models that we teach to our members, and we have multiple models that we use, but this is one of them, and this is the impulsive and corrective moves. And we do have a free forex trading course on our YouTube channel that you can check out, and inside that we do have a lesson on that. And if you would like to check out the lesson on impulsive and corrective moves specifically, you can do so by clicking on the link in the top right corner. So what Carnival here did after this impulsive move here was done and price started kind of to build this corrective structure, they kind of looked at this and said, hey, here is the support of this corrective structure, and price has bounced here multiple times. So they said, hey, I want to go long here. It has bounced multiple times. I think this is going to hold further. So they had placed their entry order here at the bottom of this corrective structure, and the stop below here, the support zone, basically below the support zone here with a little buffer, exactly like we teach inside the course, to have a little extra buffer here when you place your stop loss behind these support and resistance zones. And the target here also very straightforward, basically at the top of the structure. So a very straightforward trade, no magic sauce here, nothing really special. It's just trading pure price action, impulsive and corrective for a 3.2R return. So very nice, but very simple and good trade here by Carnival. So really well done on this. So it is possible to trade profitably just by learning how to properly read and trade the price action context on the chart. You do not need a ton of indicators or other things for that. This is just pure price action, and it can actually be as simple as this here. So to quickly summarize here, just looking at the daily chart, we do have this impulsive, corrective, impulsive move here on the daily chart basically, and this bullish short-term trend here, which is kind of this impulsive move on the high time frame. And this is then basically this impulsive and corrective structure on the lower time frame. So very straightforward trade, not much more that needs to be said about this trade in my opinion. So very well done here by Carnival, attacking this 3.2R in a matter of 40 hours. That is a really solid return. So in terms of potential improvements, if we start with the entry, there are multiple options available here. So the most aggressive entry and the highest probability entry, basically, meaning that the highest probability of the entry getting triggered is the top of this support zone, which you can see has the most touches. The least probability entry location is the bottom of the zone, which only has 2 touches, which means if you go for the lowest probability entry at the far bottom of the zone, that means your profitability will be the highest because you can have a really tight stop loss that increases the profitability on the trade, but you also have the greatest risk on missing out of the trade because you do not know if price will pull back that far. On the other hand, the most aggressive entry offers the least amount of profitability on the trade because you will need a bigger stop loss, but on the other hand, you have the highest probability of your trade getting triggered. Now Carnival here went for the middle portion of this, where we do have a touch back here on the 4th of August, another one here 7th of August, then here again 12th of August. So that's the area where Carnival here attacked with this trade. So in terms of entry, it's kind of this middle option in between most aggressive and very conservative entry here, and highest probability and lowest probability. Now in terms of stop loss, I think it's a very well chosen stop loss. It's exactly how we teach in the course. It's below the support zone here with a little buffer added to it. So stop loss really well chosen here. And the entry, again, there are multiple options available, and they just went for one of the options, which is the in-between option here, which I also think is a solid entry in this case, because if they would have gone for a deeper entry, they would have missed out on this trading opportunity. And in terms of target, I mean, if we look at this structure, same thing as with the support zone. If we draw the resistance here, you can see here where all the rejections came in. It's like this. So again, they target the highest probability target area here with this trade, meaning that this is the highest probability area of getting triggered, or I mean getting hit. Whilst if you go for these highs over here, you do not know if price will make it there. So this is my opinion, the highest probability take profit area to get hit on this trade here. So overall, in my opinion, very well done here on attacking this structure. I mean, as said, you can go for a deeper entry or you can go for a bigger target here. But in terms of just trading this structure in itself, I think it's a really solid trade here. But looking at the daily chart here, we take a little bit more of price action context into consideration. action. And we look at this strong impulsive move up here and this very tight corrective structure. Bulls are almost not giving back any ground here with this corrective structure. They are just pushing against. Bears are not able to make a lot of ground. The 20 EMA here is catching up the average of price, and once the price and the EMA meet here, price takes off to the upside. So this corrective structure was not even pulling back counter trend, it was just horizontal, indicating that bulls were still very present here in this price action, and a lot of bullish order flow was still there, which implies that there's likely another impulsive move following this structure. And due to this very tight corrective structure, we can then anticipate a larger impulsive move to the upside following this corrective structure. So in terms of that, if I would have taken this trade, I would have most likely attacked the next key resistance on the daily chart on the higher time frame here. So I would likely have gone for a target more towards the bottom of this key resistance on the daily chart, and that would have increased the trade from 3.2 to 5.4, which is a 2.2 R improvement, which is a lot. So especially if you multiply that over a series of 50 to 100 trades, that makes a huge difference. And even if you feel that you're not really sure if price will go that far, but you would like to have an extended target on this trade, what you can do is basically you could take a little bit of profit here off at the top of this corrective structure here, and then leave the rest to run up towards this daily key resistance here. So those are two options to improve upon this trade here, in my opinion. But overall, really well played here. Very straightforward trade, simple, no magic sauce, not a ton of indicators, just pure price action. So really well done by Carnival here across the board, in my opinion. And this brings us to the end of this week's top trade review video. We hope you enjoyed it and that you found it helpful. And if that's the case, please make sure to hit the like button to support us and to support our channel and to help us grow. Also make sure to subscribe to our channel to get notified immediately once we release new content. Other than that, if you have any comments and questions, please post them below the video. And if you would like to get access to more free content like this, learn more about price action context, how to read it in real time, how to identify impulse corrective price action, head over to our website at secondskiesforex.com, where we have tons of free trading articles, trading tools, ebooks, and more information about our advanced courses. Other than that, Chris and I look forward to your comments and questions. Be well, take care, stay green, stay positive, and we'll see you next week for another top trade review.